I want to talk about 6 reasons that I invest in fractional real estate and whether or not those reasons are real or just sort of imaginary and things that are made up by the platforms. Oh, what's up, YouTube? It's Joe Catchpaulia sitting on the couch making some money investing in fractional real estate online, as usual. If you've been watching my channel for a while and you've been investing in fractional real estate, this is probably not a lot of new info for you today. It might be a little bit different way of looking at a couple of these things. And it might actually be good, like talking points if people ask you, like, why are you doing this? Is this real? Is it a scam? I mean, I get this question all the time, right? Like, is this just a gimmick? Is it a scam? Is it too good to be true? There's a lot of things early on. A lot of the platforms don't really live up to the hype. You're not actually getting everything that they say that you're getting. Um, and so I want to kind of, break it down, go into the 6 main, main reasons that I think fractional real estate makes a whole lot of sense, and just talk about like, are those benefits, are we getting them on each platform? Is there any platform that's giving us all of them? And I think it's a good way to sort of measure like which one's a good one for me to use, right? So a lot of times I get people jumping in the Discord saying, "Hey, which platform's the right platform for me?" And it's really tough to know without spending some time understanding what your financial situation is, what your goals are. Which reminds me, please like and subscribe. Hit the little bell. In the description to this video, I have links to all the sites where I'm currently investing on fractional real estate online. Please do your own due diligence on all those platforms. Don't just invest in those because I do. The same thing with any of the properties that you see me mention, right? You want to dig into those on your own. Definitely don't just buy them because of what I have to say about them. Also, and this is why I was mentioning this now, in the description to this video, I have a link to the Discord that I have set up. We talk about every fractional real estate investment site. And if we don't, and you have one that we haven't come up with, jump in there and feel free to talk about it. But please join the conversation. I've noticed we have a ton of lurkers lately, a lot of new people signing up. Very few of you actually, jumping in, asking questions, giving answers. I don't want you to all feel welcome to do that. Okay, but so back to this. So, the number one reason that people have given me why they want to get into fractional real estate or why they do versus like buying real estate in real life is the low barrier to entry or the low cost to entry. This is one that I think holds up pretty well, but there's a little bit of an exception that I think that people don't understand. Okay, so uh, you know, there's a lot of the sites say, invest for as little as $10, for $25, for $50, whatever it is. And I think to a certain extent that that's true. Like if I'm buying on Saul's Lot, if I'm buying on Arrived, um, on ground floor, all of those sites, I think it's pretty reasonable to do that, right? Put the minimum dollar amount that they suggest, buy a $50 or $10 or whatever it is. Um, and at the end of the year, you're going to get a single tax form from them. You're going to get you don't have to do anything for the properties going forward. And so it makes perfect sense to just put a little tiny bit of money in. Some of the platforms that I'm on, though, that I think it doesn't. So on Lofty, yes, you can buy a token, and sometimes the cheapest ones I've bought have been $8.50. But it doesn't make a lot of sense to do that because on a platform like this, you're not a passive investor. You're an active investor. You have to be involved. And so putting $8.50 or even as little as $50, as their normal token price, that comes to the platform, um, it might not be worth your time to spend all the time that you need to in your due diligence, your monitoring, and everything like that on this platform. So, the low cost to entry, yes, it technically exists on Lofty, but it's a little bit of a stretch to want to do that. And then on Mogul, another one, because you get a K1, an individual tax form for each property, and it's because you have actual ownership in each individual property. Um, Depending on how your accountant works and what they charge you, you might want to invest a little bit more than their minimum. They already have a higher minimum on here. It's 250. But just, this is just an external factor that it might make sense for you to want to pay more because it might cost you extra to get your taxes done. If you have a CPA, and I think I might have said attorney earlier, but if you have a CPA or tax preparer, that charges you per K1 on your tax returns. Well, it's gonna, I already have 12 properties on here. It's gonna, add up pretty quickly if you're just doing the minimum amount in each. So I think it makes sense to buy a little bit more than that. But overall, I think this low cost to entry, low barrier to entry is one of the things that holds up the most, right? I mean, you can just click on here now, attach your bank account or send some crypto, and then bam, own a piece of a property in less than 5 minutes from now. I could own an additional piece of property on every single one of these platforms. And and the barrier as far as, there's not any sort of work I have to do other than I think it's prudent to do due diligence, just like we always do in our videos. So I think that one holds up pretty well. Liquidity is one that almost none of the properties or none of the platforms are actually giving you, right? On Mogul right now, there's no secondary market. I'm stuck with these until they sell or until the secondary market develops. Uh, they're talking about doing it, but when that happens, who knows? Arrived has their secondary market coming up soon. You've seen me put out some videos on this. I'm pretty excited about it happening. Is it going to happen? What does that liquidity look like? I don't know. At the moment, Lofty is the only platform that provides some liquidity. But if you've watched me talk about this before, I think it's very much overstated how liquid it is. Yes, if I have 10 tokens in something, I can go ahead and sell those right away, get money for them right away. But if I have, say, for example, 400 tokens in Odom, which I do, and I try to sell them all at once, I can maybe get, if I'm lucky, yeah, 50 cents on the dollar for what it's currently trading at, which I think is already low. And that's because of the slippage that occurs as you go to sell stuff. So there's some level of liquidity, but it's not as if at any point in time I could liquidate my account and get any amount of money that I'd be happy with, right? Like if I went and liquidated my whole Lofty account today, I'd probably get about 50 cents on the dollar, if I'm lucky, maybe even less than that, and it's going to depend a lot on how many, how concentrated your portfolio is, and if you could find someone to peer-to-peer purchase some of it, and that's between that and the very high cost of fees, the liquidity is very much, you know, it exists, but it's nothing to be excited about. Like if I'm absolutely panic selling and I need some money today, yes, I could get it on Lofty and on none of the other sites at the moment that I'm aware of. Well, you can, I think Arc 7 you can also sell stuff, but their market seems much thinner. Um, but it is, there's I don't know. I think it's very much overstated. So it's not the benefit it originally seemed. I think if I wanted to get full value, it's probably going to take me almost as long as selling the properties in real life. If I have because of the way you can only sell a little bit, and then you have to wait for the market to buy it back, and then you can sell it down a little bit. Depending on the property and if I have stuff here in real life or if I have like especially if I have well yeah I mean there's just depending on the property itself and how desirable it is, um you know it's not nearly the benefit that it originally appeared to be. What's interesting is when a lot of people look at some of the other platforms, their biggest thing is like, oh, well, it's not very liquid. I don't want to do that. I don't have the ability to sell out. And it's like, well, do you really have the ability to sell out on Lofty? That's so none of the platforms are providing great liquidity. It'll be interesting to see on Arrived how that comes out. And Moguls, isn't supposed to be till next year. What they do as far as that goes. I think if a platform that's already doing sort of well is able to get that to work, then that'll be amazing. Okay, is it passive? This is another reason a lot of people jump into this versus buying their own properties. People want passive cash flow. I think for the most part, it is um, across all the platforms again, except for Lofty. Like Lofty, you really, it is just its own separate animal. It's why I end up talking about it quite a bit because it's so different from the rest, and there's a lot going on. But on here, you can buy a token and you do have to take part in votes, but you could do absolutely nothing after that. I think the outcome for passive investors on Lofty has been historically pretty terrible. I think if you're not involved in, if there's problems, and if everybody in the property is passive, then there's a real problem. If a couple people step up and make good proposals and steer the ship, well, you definitely have some free riders that can be passive, but that platform, it's not really set up well for passive investment. I think all the others really are, right? Like once I buy into any of these, there's not really anything that I need to do uh, other than wait. On ground floor, I do end up having to make a lot of new purchases every single week. But at the moment I have it set up to do it automatically, to reinvest the money that I have. So I think for being passive, this is the one that I think most of the platforms are doing extremely well, right? There's really nothing I have to do. It is very similar to investing in the stock market. Once you've made your purchase, there's not a whole lot that's involved. Some of them you might have to do, vote on major issues or something. Some of them there's nothing at all. One of the things early on that I thought it would be a huge benefit is that you're going to have high quality deals. You'd have a professional team picking deals for you. Um, this is true on Mogul. I feel I really like the deals they pick. I think their team has experience in doing that. Um, Collab, it seems like they have a professional team that knows the student housing space. Whether or not we're actually getting a lot of the benefit from that is arguable, right? I mean, the returns that we get don't seem great. It seems like a lot of these were like bought by that team and then sold into the entities. And it's, to be perfectly honest, it's a little unclear to me how, the structure digging into it. But so even though it seems like you have a professional team here, the returns that we're getting don't really feel like it to me. Um, Arrived, I honestly, it just looks like they just buy random houses to me, right? Like they have, there's nothing, like I feel like I could just, without a whole lot of training, take some money, go out and buy relatively new homes in most markets, and come up with similar deals to what they're finding. Now their city fund seems like it's a much different situation than that, but then you were talking about a fund, not fractional real estate. Um, Ground floor, I think it's true, right? You're getting like basically their company is providing sort of the underwriting that a lender would because they are a lender. We're getting loans there, so I think it's true there. On Lofty, it is not true at all. You're not getting. There might be some high quality deals with a professional team behind them, but you really have to dig to find them, right? It's not the average, and I mean, you can certainly find a couple, but you can't just go on. You have to do the work to find them. It's not the other way around, like where Mogul, you've got, that's the a big part of their company is the team that's finding those deals. um, Diversification, this is one that when you compare it to me buying properties in real life, I certainly have a much more diversified portfolio since I started investing in fractional real estate than I did prior. I think that a couple of things. One, like on Mogul, I'm starting to get a lot of similar deals. And although they've put out some info on like, hey, even though a lot of these properties are in Atlanta, it's a lot of different submarkets, and so you're getting some diversification that way. And then they talk about, and then I am in Houston and Dallas and Austin, Mesa, Arizona. So I'm getting some diversification, certainly more than I had in my own personal portfolio. Um, on ground floor, I was getting a lot of diversification. I had like 100 and something loans. Then they just force paid off those. I have some other videos on that, but I'm starting to build up a really diversified portfolio again there. So I think that that's true. Um, Saul's lot hasn't doesn't they don't have a ton of deals yet, and they're almost all, I think they're all basically in the same market. So you don't have it there yet. They're pretty new. Um, Collab actually nice and spread out. In all of those that I just mentioned, and Arrived, I mean, Arrived has like 500 different properties. Even though their deals all look pretty similar, they're in a bunch of different markets. So I think, you can get a lot of geographic diversification. You can get a lot of deal diversification. One of the things on Lofty is initially I was buying lots and lots of different deals on here too. I'm starting to pare down my portfolio on here a little bit because it requires the time of really being involved in those properties in order to get a good outcome. And so it is the site of all of them, even though they have a lot of diversification on the platform, like there's properties all over the place. I think, I'd never be able to own 100 Lofty properties and feel confident in the fact that I don't have to like be on top of what's happening with each one of them. So I think, that hurts the ability to diversify on there. Where like on Mogul, they just don't have they don't have a bunch of different markets. But I'm not worried about just buying a whole bunch of them. So I mean, none of them. I think ground floor probably gives you the most diversification, but uh, it's always a lending product. It's always on a fix and flip or new construction, and it is somewhat. Do I have the? Let's see. It is still somewhat. Let's see. Yeah, I mean, they're only in so many states, right? And this just shows the ones that I've had repayments in, but I think it's a pretty good proxy for where they're actually lending for the most part. Um, so I think it's far superior to just if you buy properties, whole properties on your own. But it's not the same level as if as maybe some you might have originally thought. Like early on, I was just buying well, like I had 120 loans on here. I was just buying up stuff all over the place. Really thinking about that diversification is one of the main benefits of fractional real estate. I think it still is. I think that there's, um, you know, you can get way more diversification than you can just buying your own properties. But there are little factors that are limiting it more than I initially thought. Um, Not so much though that I mean, I think it's still a huge benefit over, whole properties. And then no personal debt. I mean, this is one that I think early on didn't really strike me as being such a big deal, but on every single one of these platforms, I'm not having to take out a mortgage to buy property, but in a lot of the platforms, I'm getting the benefit of leverage in some way. On Mogul, every single one of the properties on there are leveraged, with an interest only first mortgage. On Lofty, a lot of the deals have mortgages on them, not all of them. Um, the ground floor is not really. I'm not getting the benefit of leverage. We're a lender there. Saul's Lot, we're not, it's a weird position, the ownership structure, so we're not really benefiting from leverage, although we are higher up in the capital stack, and that is why, one of the reasons why we get a good return there, because people are basically using it as, it's behind their own personal leverage when the equity that they're selling. So in a certain way, I think we kind of are. But in all of those cases, I'm never signing on a note. Nobody's ever looking at my personal finances. These things aren't showing up on my credit report. And yeah, and arrived as well, right? You're getting the benefit of leverage. Although, one of the things I know I've got arrived up here now because it is a platform that I technically own something in. But I like to talk about it because it's one of the biggest platforms out there too. There's more homes on there than any of the other sites that I talk about. But even though you get the benefit of leverage, your levered returns on this platform that they're stating, not just my opinion of them, but what they tell you your levered return is going to be, is lower than unlevered returns I'm getting on properties in real life. I mean, they're just not, even though you're technically have leverage on a lot of the deals, some of them you don't. Um, the deal itself is just not that great. And so, um, you've got leverage on something that is, it's not, it needs that leverage to make it just as good as something I could buy unlevered. So I'm adding some risk. So I don't know. Overall, where does that leave us, right? I mean, we just to recap, we still have a relatively low barrier to entry, especially if you compare it to buying a property in real life. Like even where I mentioned, okay, it's limited, or maybe you need to put a little bit more. Still, if you have a couple $1,000, that's more than enough money to get started on any of the platforms. And you certainly couldn't say that about buying a property in real life. The liquidity, I really do think that it's the biggest issue, with every one of these platforms right now. They're all illiquid investments just to different extents. And or you just, it's liquidity you don't want, right? Like, yes, I mean, there's lots of stuff that I could liquidate and get 50 cents on the dollar, but is that a benefit? I mean, and if I absolutely need the money, it is. But it's not much different from buying properties in real life. And, if I own real life properties, I get to decide, hey, can I sell this today? And so I'm probably closer to full liquidity owning properties in real life than I am on any of the platforms at the moment. I think there's a lot of platforms that are trying to solve for that right now, but they just aren't there yet. Um, Passive investment, even Lofty, which requires the most involvement, they're still more passive than if I just own my own property. So I think we're doing well there. A lot of the properties, they do have deals that are, well, I mean, no, some of the platforms do have deals that are picked by professionals. Honestly, the only ones I'm really excited about are Mogul so far. Will some of the others catch up? Will they start putting out better deals? I mean, Saul's Lot is their average deal I'm doing very well on. It's just not, it's a different type of deal. So it's hard to, it's not an apples to apples comparison. But there is certainly um, a team with some expertise putting those deals together that are making us money. So I think they can be thrown into there as well. Diversification, yeah, even though it's not as great as I thought it was initially, we're still just crushing the type of diversification that you can get when you're buying properties on your own. A lot of people are like, oh, if I want diversification, I'd just buy REITs. Um, okay, yes, that solves one problem, but then you run into a lot of these other problems as if, like, the main one. I've done a lot of videos about like why REITs I think are not the right answer, but the main one is it's just really hard to value those, right, versus the individual properties that you buy. And then, yeah, being able to get some levered returns and have no personal debt, I think is just huge. Um, Obviously, I have bought investment properties in real life, all cash, and even some that I was able to turn into deals and make really great returns on. Uh, in general, you can't get the kind of returns that you're getting on fractional real estate without putting leverage on it. And so, yeah, I think at the end of the day, there are still a lot of advantages of doing fractional real estate versus buying properties in real life, and it's why I continue to be excited about this space. I'm gonna keep buying it. You've seen over time, just in the short time I've been doing this, that my favorite platforms have changed. The platforms themselves have changed too, right? It's not just that I'm learning more about each, but over time they're evolving as well. Um, I still think that there's a real benefit to this versus just investing in real life, and that this should become a very large industry, and that's again why please join the Discord, right? I think that as a group of investors in a new industry, we should have some ability to sway some of these platforms into doing more and more things the way that we'd like to see them do them. Stuff to benefit all of us as investors in any of the platforms. So please do that. Um, if there are reasons that you're investing in fractional real estate that I didn't talk about, please feel free to jump in the Discord or jump into the comments. Let me know what those are. If you think I'm overselling some of these benefits, right? Like if you think some of these things are just like, that's really like it's a gimmick, it's not real. Let me know that too, because I think, obviously I'm still learning about all the platforms and fractional real estate in general. Um, Even though at this point I spent a lot of time digging into it, I'm still surprised by stuff on a pretty regular basis. And I think that, at the moment, I'm convinced that this is going to be the way that I'll invest into the future, provided some of these platforms can continue to grow and do, and improve and, um, survive. I mean, some of them, I think there's some question on if they're going to be around next year. There's definitely been more than one platform that is blown up over the years, and hopefully we don't see too many more going forward. But that's certainly a possibility. I am curious if you had to bet on one of these six platforms going under: Lofty, Ground Floor, Arrive, Mogul, Collab, and Sol's Lot. Which one do you think is most likely to fail? And also, which one do you think is the most likely to be the winner going forward, if there is a clear winner in the future? Please put that in the comments. People don't comment enough on here. I got a couple of you guys that I talk to regularly, and I really appreciate the comments. Some of you um, talk both in the Discord and on there, and it's nice to see. Um, I think it's a good way to engage some of the people that are, not so much involved on a daily basis. I think that, I do love the amount of people that we have in our Discord now that are talking regularly. But it is, especially some of the platforms, we just have a lot less people represented than others. So, feel free to jump in there. And again, if there's some platform that you think that we should add a channel for, let me know. And I think that's it for today. Till next time, I'll just keep making mistakes so that you don't have to.